Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. Earnings season keeps marching on, and one of the companies that I wanted to highlight is Block, or as it used to be known, Square. This is one of the companies in the fintech space that I think has a lot more power in the market than investors are pricing in. Results showed really strong growth in both the business side and the consumer side. They're basically separate apps at this point, and there's finally starting to be some operating leverage in the business. So I'm going to dig into the results, what I liked, what I didn't, and highlight what kind of trends investors should be looking for going forward. My name is Travis William. Thanks for watching Rive Investing. Please subscribe here on YouTube for all my content, and let's get right to the results. So you can see the overall overview of financial results here. Revenue, gross profit is really the thing that we want to watch for Block. Up 32% from a year ago to $1.71 billion. And then they do a nice job in this earnings letter breaking out both the Cash App and the Square app. The Cash App has been growing really consistently, now up 49% from a year ago to $931 million in gross profit. What's crazy is the Cash App, which is still relatively young, is now generating more profit than Square, which is a much more mature business. That was up 16% year over year to $770 million. On a GAAP basis, Block was not profitable, lost $17 million from net income perspective. Even the operating loss was $6 million. I'll highlight below what's driving that. And the big number is stock-based compensation. The company's at about $1 billion run rate of stock-based compensation, actually a little bit higher than that for the full year. So that's always something you want to consider, but that is not a cash cost, but it does come out of operating income and net income. But both of those numbers are improving over time. So that's the trajectory that we want to see. Same thing for something like adjusted EBITDA. For a long time, Block was not adjusted EBITDA positive. Now $368 million, up 89% year over year. Again, we're starting to see that operating leverage really kick in. So revenue goes up 20%, but adjusted EBITDA goes up 50%. That's the kind of trend you want to see with a software company. The important numbers are kind of all over the place, so I'm going to bounce around here. But one of the metrics that we always look at with Square and the business side of things is gross payment volume. That's what GPV is, $46.2 billion. And you can see here that they've done a nice job spreading out where that comes from a size of the business standpoint. About even between businesses that are under 125,000 in revenue, between 125 and 500, and then over $500,000 in annualized GPV. So that's a nice trend there. The other thing I want to highlight is subscription-based revenue. So these are the kind of subscriptions that business owners pay for, like scheduling, payroll. These are all add-ons that you have to pay for every month if you're a business owner using Square. You can see that Square generated revenue of $342 million from subscription-based revenue. That was up 21% year over year. But if you exclude PPP loan forgiveness, it was actually up 48% year over year. So the important thing here is this is not a transaction-based source of revenue where Square is actually generating a very small percentage of each transaction. This is a subscription source of revenue, so a more SaaS-like product, very high margin, and that's going to really drive the bottom line. So this is a phenomenal place for Square to be growing, is on the subscription side of things. The Cash App, we have cash inflows of $61 billion, up 27% from a year ago. So that's a solid trend there. Gross payment volume for Cash App business was $4.9 billion, up 24% from a year ago. So this is one of their revenue sources. And I pulled up the fee structure here. It's basically very similar to the way that Square runs, taking a 2.75% processing fee to collect money through the Cash App as opposed to a Square payment. So very similar, just kind of copy pasted that, except you're using a debit card instead of a credit card. So it has a little bit lower fee structure for Block as a company. The other thing I wanted to highlight here was the Cash App generated revenue of $974 million, subscription and service-based revenue. This takes out Bitcoin, which kind of complicates matters as far as the operating numbers for the Cash App goes, and that's very, very low margin. So I think we can kind of eliminate that in the analysis of the company. But that was up 56% from a year ago. And what's driving that growth in revenue is transaction fees. So anytime you're using the Cash App card, Block is going to take a small percentage of that transaction as its revenue. That's what's driving a lot of that revenue growth there, up 56% from a year ago. So that's another positive, just because people are using the Cash App ecosystem more. That's really what you want to see as an investor, is people using the Square ecosystem and the Cash App ecosystem. And now you have businesses and consumers using your products. Now, over time, you can start integrating those two things together and make it easier to communicate together. I think that's where the ultimate driver of profit growth will be. Operating expenses did increase 22% year over year, so not quite as much as revenue. That's why we're starting to get some of that operating leverage. And if you go all the way down to the bottom of the document here, you get the reconciliation between net income and adjusted net income. So net loss associated with all shareholders is $19.3 million. What you're adding back here, the biggest number is this stock-based compensation number, $280 million for the quarter. There's also some intangibles that are coming back in. But when you get adjusted net income of $252 million or 40 cents per share, that's because it's pulling out some of those non-cash costs. Now, these are real costs that go into that ultimately dilute shareholders. But that's why we need to understand these two numbers is you can be not generating a profit, but still generating positive cash flow. That's where we are with Block as a company. At the end of the day, it's positive that Block is growing from both the business side, the Square app side, and the consumer side, the Cash App side of things. If they're growing with both of those, they have more leverage in the marketplace. They're leveraging the operating expenses that go into building both of those apps. And ultimately, that should drive profitability over time. Now, I think it's interesting that the market did not react particularly positively. As I'm recording, the stock's down 1.9% in the last 5 days. But I think these results were really positive. And if Block as a company can continue to attract customers and businesses, continue to grow double digits, this is going to become a better and better company over time and a more profitable company. I own shares. I don't intend on selling them anytime soon. This quarter was another step in realizing that long-term value. But what do you think of the results? Leave your comments in the comments section below. Don't forget to follow Rive Investing. Thanks for watching, everybody. See you here next time.